Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, there's been some recovery. That too has been sold into, so it's quite a mixed picture. Continues to be very volatile. But Bank Nifty is the one which is powering through, up 650 points. And we do have a lot of movement in the broader markets as well.
That's right. Quite a bit of a recovery from the intraday lows. Like you mentioned, after 8 to 9 trading sessions of gains, the broader end of the markets are taking a bit of a breather today. But quite a lot lined up for the show. And, let's start off with the top headlines. Stocks take a leg down across the board after scaling to a new high on likely profit taking. Consumer durables along with oil and gas are the big drags, even as financials are the one green spot, with Bank Nifty scaling record high levels. Mid-caps continue under pressure.
Vodafone PLC sells nearly 18% stake in Indus Towers, leaving it with just about 3% in the telecom towers company. Says proceeds from the sale will be used to repay its existing lenders. Large block trades also executed in Gland Pharma, ZF Commercial, Sensex Engineering and AU Small Finance Bank.
AMI Organics gains in trade as it looks to raise over 400 crores rupees via the QIP route, while Craftsman Automation is also looking at a 1,200 crore fundraise.
Sources tell CNBC-TV18 that the Fitment Committee has recommended further deliberations over proposed GST cuts in fertilizers, as a blanket exemption could lead to duty inversion and blocking of capital. Fertilizer stocks on the back of this surged. Chambal Fertilizers RCF FACT gained between 6 to 8%.
Profit booking is seen in real estate stocks. Soba, Brigade, Prestige lows are among the top laggers in the NSE 500 index and lose between 2 to 4%. The Nifty Realty index also falls around 3% in the session today.
Okay, all right. Let's talk about the markets, because as we've been pointing out, there's been a recovery in the Nifty from the lows for sure. But for now, the Nifty is down 22 points. It's 23,537, so it stays above the 23,500 mark for sure. The mid-caps are the ones which are lagging today. We'll discuss greater in detail in terms of movers in the broader markets. That one is down 364 points. But banks powering through and how. So that index has done well for 2 consecutive sessions for sure. We'll see whether that continues or not. But for today, 700 points higher in for the Bank Nifty. But today, the advanced decline ratio, Vivek, is in the favor of declines. And as we've been pointing out, it's been a stellar rally. So some profit booking was par for the course.
Some profit booking par for the course. What's actually dragging the market lower? It's actually the bit of an auto pack. The auto pack is seeing a bit of profit taking today. The metal index is seeing a bit of profit taking today. They have been stellar outperformers today. Names like TVS Motors, etc. Even Maruti, for that matter, is seeing quite a bit of selling pressure, from the intraday highs. But this is our special segment, Mid-Cap Movers, where we have Hormas to take you through the mid-caps that are buzzing around in the session.
Well, the Nifty certainly has the Nifty Bank to thank to keep its losses in check. But the broader markets are seeing a bit of profit booking. And as you can say, it's par for the course, as you were highlighting. It's the first time since the 4th of June that both the mid-cap and the small-cap indices are taking a bit of a knock in today's trading session. So we'll start off with the losers in the broader markets. And Z Entertainment is the first one there, 3% lower. Another top-level exit that has taken place at the company. Voltas, KC International, IRB Infra, all of them have been high flyers in recent times. So seeing some bit of profit booking from those levels. It's a day that has belonged to block deals, and all 4 of those stocks have reacted to those. ZF Commercial off the lows of the day but down 4%. Sensex Engineering off the highs of the day but still 5.5% higher at a record high. Indus Towers has recovered substantially from the lows of the day after clarifications coming in from Bharti and from Vodafone itself, and Gland Pharma 1.5% lower after its own block deal. So other stocks that are witnessing some bit of profit booking are PSUs, and within that specifically the defense names. Mazagon Dock is down 4%, Cochin Shipyard, HAL, Concor, all of them seeing losses of anywhere between 2 to 5%. So those stocks are seeing some bit of profit booking at higher levels. Some stocks doing well on the back of volumes, and there is where you would find the fertilizer stocks taking the spotlight there. Chambal, FACT, Deepak Fertilizers, RCF, anywhere between 4 to 8% on very strong volumes, and Ramakrishna Forgings also makes a mention here. And lastly, other than fertilizer stocks, the ones that are bucking the trend in in today's session is Sunteck Realty, an outlier in an otherwise weak real estate space. Zomato nearing a record high at 5% at 361 WAM, also having a good day at the office. Back to you guys.
Okay, all right. Sunteck Realty, by the way, a one-way move is what we're seeing. Has been a laggard in the real estate space, but is making a comeback now. Thank you, Harmas, for joining us with all those names in the broader markets. Let's now welcome Ruchit Jain of 5paisa.com for a technical check on the markets. Ruchit, good afternoon. Thank you so much for joining us. Well, do you think this consolidation or volatility, it could continue? Because we've continuously seen a one-way move, especially on the mid-caps as well. It's been just in the green since 4th of June. Do you think now is the time for some profit booking?
Yeah, hi, very good afternoon, Sonal. Very good afternoon, Vivek. Well, Sonal, if we look at the broader trend for the market, there are no signs of a change in the trend. Although we have been witnessing some divergence today, where Bank Nifty is up by 700 points, but still Nifty is flat. But if we look at the supports, then 23,400 followed by 23,200 are very crucial supports for Nifty. Until the supports are intact, I think even if we go through some corrective phase, there would be more of a time-wise correction where the benchmark would consolidate in the range, but sector-specific rotations would continue. Today, you can see a very good momentum in some space such as private sector banks are there, sugar stocks are there, even fertilizers are there. So I think such sector-specific rotations could continue. So if you are a very short-term trader, you need to identify the sectors which are in momentum, and rather than sticking to the names which have already seen a rally, it's better to look for names, sectors which has a potential to see some good returns in the near term. So we don't expect any significant down move in the index. I think a relative outperformance in the banking space could be there. Banking Nifty has broken that 50,000, 50,300 resistance. And I think the index is poised for a move towards 52,500 in the short term, which is a 127% retracement of previous correction. So we are advising our clients to trade with a positive bias, but certainly one should look for stocks or sectors which are outperforming today.
Good afternoon, Ruchit. Which are your top picks for the day? Any banking names there?
Definitely, Vivek, and I think one should not miss the large cap private sector banks today, which are showing signs of breakout. And as I said, that if Bank Nifty goes towards that 52,500 mark, then that would be led by the private sector banks. Axis Bank is one stock which one can look for creating fresh long formations. The stock has went through some consolidation, but the 20 EMA has now been acting as a good support. With stop loss below the 20 EMA of 1170, one can expect a move towards 1290 to 1300. And my one more pick would be from the insurance space, which is ICICI Lombard. So this is also one of the stock. If we do relative analysis with stocks within the sector, then this stock is also bucking the trend compared to the other names. So I think 52-week highs has been seen there too. Last 3 trading sessions, volumes have been quite high. So ICICI Lombard, one can also create fresh strongs with stop loss below 1700 for potential targets around 1850 to 1860.
Okay, all right. Thank you so much, Ruchit, for joining us. So those are some technical trades as per our technical guest today. We'll sip into a break now. Prashant Thakur from Anirok Group will join us on the other side to discuss trends in the rental space and what's happening in terms of rental yields and more. Stay tuned. Welcome back. You're still tuned into Midcap Radar. We spoke about a discussion going on rentals and what's happening in the residential real estate industry. In fact, the latest Analog data shows that a surge in housing supply has resulted in nearly 50% drop in rental price growth in top cities. So what they are trying to say is in quarter 1, the rental growth was almost 4 to 9%, and in quarter 2, it has dropped to levels of 2 to 4%. This is, of course, till date. The prices have slowed down on a quarter-on-quarter basis. Whether it's a trend which will continue and what's leading to this particular fall that we're seeing in rental growth, Prashant Thakur, the Regional Director and Head of Research at Analog Group, is joining us now. Prashant, good afternoon. Thank you so much for joining us. You have mentioned that maybe higher supply is one of the reasons why we are seeing these rentals coming down. Do you think that's just it, or even the demand is going down now because people are buying more flats and not so much renting it? Is it fair to say that?
So I would say it's a combination of both, but the prime reason is that there's a huge supply that has come into the market, the ready-to-move-in supply. So 23, if you see, it was a strong record breaking year in terms of delivery. And same, I think, in 2024 also, we expected to deliver close to 5 lakhs housing unit. So this is one major reason. And second, you're also right to a certain extent that people have, more preference towards buying because the rental surged quite significantly, and people were thinking of rather than buying than renting. But the prime reason is yes, the delivery are quite strong, and we also need to take into account that post COVID, what we saw was a steep surge in the rentals. That there were certain factors behind it. The construction came to a halt during COVID, which kind of delayed the delivery of the projects. And all of a sudden, when the offices reopened, the schools reopened, there was a huge rush to kind of resume the office and school. That led to a surge in rental. But slowly that factor is settling down, and that's the reason we are seeing a slowdown in the growth of the rental. So this is the primary reason that I feel that is playing out in the market right now.
Good afternoon, Prashant. Thanks so much for joining us. So, number one, you've said that given the fact that supply is a lot higher is why this particular phenomenon is playing out. You've been tracking the space for quite some time. Typically, when such a phenomenon occurs, do you think that the trend of lower rising rental yields can continue, or do you expect that this is a one-off, this particular quarter is a one-off, and going forward, once again, you will start seeing a rise as far as the rental prices are concerned?
No, it's a classical demand and supply scenario playing out. So as I said earlier, that right after COVID, there was dearth of supply. And now what you have seen, that supply is kind of getting normalized. We also need to take into account that this quarter that we are talking about, April to June, which is typically the first quarter of the financial year, is you see the highest amount of rental activity because the schools have reopened, the new financial years, a lot of new offers are rolled out. You see a lot of inward and outward migration of employees. So if this quarter has seen a kind of a slowed growth in the rental growth, I think this phenomena is primarily because the supply has come in, and we expect the supply to continuously hit the market. So it would be a normal growth rather than what we have seen, that super normal growth where people were finding it very difficult in cities like Bangalore and Pune to even find a suitable rental accommodation. So in my opinion, we'll see a stabilized market going forward.
So there'll not be a decline, but a steady growth is what you're saying.
Yes, because see, if you look at the standard rental agreement, it has an inbuilt escalation clause from 5% to 10%. So every year you might see certain increase, but once in real estate, the price, if they reach a certain level, they don't come down. They might stagnate for a couple of quarters. That's a different story altogether.
Okay. You spoke about how during COVID it increased. What is the other phenomenon that took place is a lot of these micro markets also came up. In your report, you mentioned Gachibowli in Hyderabad. That is one area which is seeing a lot of development suddenly. There are other micro markets in bigger cities. What kind of rental growth these new micro markets have seen in the last couple of years? Do you think it has been higher than 4 to 9%?
See, we also need to understand one factor, that when infrastructure opens up, new land parcels, new micro markets, and you're right that a lot of development is happening on the peripherals of these cities. For example, if you see Gachibowli or let's say other peripherals of Mumbai market, where a lot of activities are happening. So when the supply is huge, there will be an automatic cap on the rentals. So in my opinion, the rental escalation will be in the range of 5 to 6% in these peripheral markets. the higher rental escalation might come in certain micro markets which are within the city limits and which are very aspirational location. For example, let's talk about South Mumbai. Over there, the rentals might be on the higher side because the supply is limited of the preferred projects that these prospective tenants are looking at. But when you talk about peripherals, you have huge supply and huge option to select from. A lot of townships are coming up, a lot of gated communities with huge amount of inventory is getting completed, which is a good sign that talks about how the entire cycle has been unlocked, where the projects are being launched, it is completed on time, the land acquisitions are quite healthy, which points towards a good and healthy, vibrant real estate market.
Prashant, one follow-up question. You've spoken a lot about rental deals and rental prices. Give us a sense of how residential real estate prices are shaping up now, especially in metros, especially in a city like Bombay. You're seeing quite a few new launches. You're seeing a lot of redevelopment properties coming up and a lot of self-development properties as well that a lot of societies are going for. In that context, how do you see prices shaping up?
See, last 2 years we saw a steep, run up in the prices. It was more of the catching up phenomena because before that, for almost 5 to 6 years, the prices did not move up. Now, with everything coming back to normal, huge supply coming in, redevelopment coming in, I expect the price increase would be in the range of inflation plus 2%. So in the range of 5 to 8%, you can say that will be the normal increase. It is again, I would reiterate that the basic fundamental of demand and supply is playing out in the market, where now good amount of supply is hitting the market. That's the reason you'll see the price growth happening, but it will not be a supernormal growth that you would see.
Okay, so not supernormal growth, of course. The kind of steep price hikes that we've seen, especially in areas like NCR, and we're not even talking about Mumbai here, not only rentals, even the prices are through the sky. But Prashant, thank you so much for joining us with all your insights. An interesting update that's come by in the residential real estate industry. Rental growth, that is slowing down. It's almost down 50% if we compare it to Q1 levels. We'll slip into a short break now. When we come back, we'll put focus on Axis Bank, Max Financials and Mishra Dhatu Nigam, which are moving in trade on the back of news updates and a lot more. Stay tuned.
Welcome back to Midcap Radar. Well, when you're looking at the market, some of the stocks that are continuing to hold up quite strongly, especially in the F&O space, are names from the fertilizer as well as the sugar pack. So look at some of the top gainers over there. Look at Balrampur Chini, continues moving higher, 3% higher today. Chambal Fertilizer, 7.5% higher. Coromandel International, some of the stocks that are doing quite well. But now putting the focus on Axis Bank and Max Financial, Axis Bank has approved the acquisition of an additional stake in Max Life Insurance. Yes, joins in with more details.
Well, as you rightly pointed out, Axis Bank has approved the acquisition of additional stake in Max Life Insurance. The quantum of the stake is about 0.98%. The Axis Bank stake in Max Life Insurance post this transaction would go to about 19.99% from the current 19.02%. Now, this particular transaction was on expected lines, and this is not as important, but what it leads to will be very important for Max Financial Services. The management had told CNBC-TV18 in the previous interview that once the Axis Bank transaction is concluded, and that's when the restructuring process at Max Financial Services would actually begin, the management expects this 0.98% stake to be acquired in the next 2 to 3 months. Let's assume it to be the first half of current financial year, which means by the second half of current financial year itself, the restructuring process at Max Financial Services would begin. Now, this restructuring would include a merger of Max Financial Services into Max Life Insurance, and through that, Max Life will get directly listed on the exchanges. As we know right now, the entire business is in Max Life Insurance, but what is listed is Max Financial Services, which is the holding company, and a merger or a restructuring would lead to a simpler corporate structure at Max Financial Services.
Oh, okay, all right. Thank you so much, Yash, for joining us with all those details and giving us the analysis as well. So that's about Axis Bank and Max Life Insurance. Let's now put focus on Mishra Dhatu Nigam. Earlier today, we caught up with company CMD Sanjay Kumar Jha. He expects a revenue contribution of 10 to 15 crore rupees from Pratt & Whitney in Q4 of FY25. Ads margins will be around 25% in FY25. Listen in.
Revenue potential for FY25, I'm not seeing much. In fact, it will be mostly in the area of certification and qualification of our facility. But I say in the last quarter of FY25, we may see some in the range of 10 to 15 crores worth of supplies. But definitely it will start, it will convert into the higher volume right from the next financial year, that is from FY26. So I am finding that definitely it will be around 60 to 70 crores in that range per annum coming from that sector, definitely. Has picking up. The last year we had almost 6% of our turnover from the export. This year we are planning to almost almost increase our export to coming from the 2 times. Last year we have 70 crores. This time we are planning for 150 crores in the export market. Revenue growth last year, the way we have done crossed almost 23% we have the revenue growth. We will maintain the same momentum this year also. Last year we had around 20% operating profit margin. Maybe it will be coming to around 25 in that range.
Well, Midani cooling off after seeing a sharp spike, in the intraday session. But the next set of stocks in focus are the gold jewelry companies like Kalyan as well as Senco Gold. They continue to shine after brokerage firm Motilal Oswal initiated coverage on both of these stocks. Mangalam joins us in with more details.
Well, so the jewelry space is in focus largely because of the Motilal Oswal note. But importantly, the underlying trend is the shift from unorganized to organized jewelry. In fact, as of now, organized accounts for nearly 36 to 38% of the industry, the jewelry industry that is. And this number was just 22% in FY19. So Motilal Oswal actually has, pinned the growth of the last 5 years in this sector, and they found out that the overall industry grew at around an 8% CAGR over the last 5 years. In that, the organized business actually grew 18 to 19%, and in that as well, the leaders of the industry, which are Titan, Kalyan, and now Senco, which is recently listed, all of them grew upwards of 20%, and that meant market share increasing. Why is that? Because there is rapid acceleration of consumer behavior towards organized purchase as against buying from their local jewelers in an unorganized manner. And secondly, all these companies are also looking to expand their presence in the country, and a large part of that is happening through franchise route. Now, franchise not only reduces the capital exposure and is better when it comes to return on capital employed, it's also important because it enables faster growth for the companies to go ahead and access these stores itself. So all those factors are good for the industry, and as a result of which Motilal Oswal has initiated coverage on Kalyan Jewellers and Senco Gold with a buy rating on each, valued Kalyan at around 45 times FY26 earnings, also Senco at around 35 times. So price targets of between 525 and 1300 respectively, and they've reiterated their buy on the industry leader with a target upwards of 4,100 rupees, valuing Titan at around 65 times FY26 price to earnings.
Okay, all right. So that's about the jewelry space. Some of those names doing well. Titan, though, has come in for some profit booking. With that, we'll do one thing. We'll take your leave on this edition of Midcap Radar with the news that Nifty is where we started the show at. So 22 points lower there. Midcaps are underperforming. 350 points gone there. And banks, they have surged a little bit more. So adding on to those gains, up around 800 points on the Nifty bank right now. So stay tuned to CNBC-TV18, your stocks when we return.